Kawaljeet Saluja is Executive Director and Head of Research at Kotak Institutional Equities. Kawaljeet, good to have you with us here. Thank you very much for your time. What's your sense, Kawaljeet? Will IT earnings continue to underwhelm broadly for large caps and mid caps?
The numbers are going to be weak across all companies. The revenue growth would be fairly muted. But as Rima summarized it very well, the focus this quarter is going to be the deal wins, and the numbers are going to be fairly robust. But if you're talking purely about the numbers, nothing much to look forward to in the quarter.
Okay, what about TCS? I'm interested, Kawaljeet, to understand how the stock would move post the buyback, because it's already at a 52-week high, and generally post the buyback is when the stock tends to disappoint a bit. The run-up is largely ahead of the buyback. Is this time going to be different, and how should investors approach it?
Buyback is just an alternative form of dividend distribution. So that's basically a part of the regular cycle. So nothing much really to read into it. TCS has a fairly clear payout policy of 100% of free cash flow, and this buyback just ends up achieving that objective. Yeah. So there's nothing much to read into the buyback. But if you're looking at probably the fundamental performance, then the numbers are going to be muted. But again, the entire focus will be on deal wins, which will be remarkably strong.
All right. Hi, Kawaljeet. Good to see you in. A long while since we chatted, Kawaljeet. I wanted to ask about mid-cap IT companies. Some of these names, given all the risk, talk of slowdown, but they have just been moving in one direction, and some of them are at a big premium in comparison to the large cap names. Your view on mid-cap IT from here on?
I guess I struggle with this general clustering of companies. One set of large cap companies, another set of mid cap companies. In large cap companies, you have certain companies that are underperforming, which is the likes of, let's say, Wipro, Tech Mahindra. In mid cap as well, you'll have similar companies underperforming. Now, there are certain leaders in mid caps, there are certain leaders in large caps. What you have to focus on is companies which have the right model, right leadership, and can compound consistently. Companies, which have those attributes will pay at a premium. So let's say Persistent, which has been delivering quite well for some time, should ideally trade at a premium. And LTIMindtree, which has grown at, let's say, 2 to 4 percentage points higher than some of the large companies, does deserve to trade at a premium. And then there are laggards as well within mid caps. So I guess, do not cluster companies just basis, size definition. There are companies which have scalability attributes, and then there are large companies which have challenges. Yeah. So just take every stock, on its own merit.
There were some large deals that Infosys signed in this quarter gone by, right? So I'm just trying to understand what is the expectation from that. And is there any change in the FY24 guidance that the company has given out? I think the revenue guidance was 1% to 3.5%. Do you expect any tweaking of that?
Not much really. I think they basically retain the guidance. Maybe, if at all they have to do something, they might just take the lower end of the guidance band up a little bit. But FY24, I don't think the large deals will contribute a whole lot to revenues. I think the big contribution of these large deals will come in FY 2025. And, I just see actually that, Liberty Global deal is mentioned at £5 billion. My guess is that it's 1.6 billion pounds, about 1.6 billion euros rather than 5 billion euros. So I guess, but, when Infosys reports the mega deal wins, or the overall deal wins, that number will be remarkably strong at $5.5 to $6 billion, which is our estimate as compared to the last 8-quarter average of $2.4 billion.
Kawaljeet, hi. So, this is just to kind of take a slightly macro-ish view here. U.S. interest rates have gone up about 450 basis points roughly. This is comparable to what we saw in the 2007-8 period, right? Actually 2006 to 2008 kind of period. Back then, of course, there was subprime, etc. Something broke. This time, nothing. It seems to be pretty all clear. But if we were to get into some unexpected trouble, with US still being the biggest market, do you expect that? Because a lot of debate whether whether it can be so perfect, the so-called soft landing, that not too hot, not too cold, or do you think it will be a little bit messier? Your sense?
No, that has been an overarching worry actually in the IT services sector over the last 12 to 18 months, and that's something which keeps you awake in the middle of the night as to what's going to happen. What will the state of macro? Our base case assumption for FY 2025 is a soft landing, and which is forms the basis of our forecast. If there are any changes to the macro environment, then we'll have to change our estimates accordingly to reflect the new reality. But I think the macro for the time being is a concern.
Okay, all right. We won't have to wait too long to find out from the management, right? This week we'll know more. Kanwaljit, thanks a lot for stopping by. And as Nigel was saying, seeing you after a very long time, so hopefully we'll get to see you more often on the channel. Thanks a lot for being with us.